Good morning. It's Thursday, a little after 10 a.m. here. Some news announcements in the energy market here. We've had OPEC come out and say that they are going to reduce supply by another million barrels. This adds to the 1 million barrels that Saudi has already voluntarily cut. It's given a bid to crude oil. We're seeing it up a little bit over 1.5% here right now. One thing you should take a notice of is the structure of the forward curve. January crude oil is at 79.03. February crude's at 79.07. We call that, when forward prices are higher, we call that a contango market. That usually means that prices are relatively weak. But when you go further out into the curve to March and into April, we see backwardation starting to kick in, and it's starting to increase pretty dramatically. You now have about a 12-cent differential between February, March, and March and April, 23 cents. That is what we call a backwardated market, when prices are lower going out into the curve. So that's indicating tighter supplies, and that's obviously is being indicated from the Saudi announcement of additional million barrel, or at least the OPEC announcement of million barrel additional cut to make it a total of 2 million barrels a day. Also have to realize that the SPR still needs to be refilled, which is going to be more oil that's going to be coming off of the market, at least in the global world here. When it comes to trades, we're in the Devon Energy. We are still going to hang on to that trade, the Occidental of the 62.5 of March of next year. Trades going in the right direction for us. But what we are taking a look at is playing XLE, which is an ETF which holds some of the big majors in the oil sector: ExxonMobil, Chevron, several others. You see it's right below the moving average here. And just at the end of October, we saw it trading well above $90 a barrel. We do think we can get back to those levels over the weeks and months ahead, especially with this cut that was just announced. So the trade that we are going to do is the XLE. It's a bulk call spread. We're not just doing calls on this. We're going to do a spread on this because the VIX is coming up here a little bit here. It's up to 2% here today, almost 2%, at a little bit over 13. Still rather low, but we're going to do a spread, a $10 spread of March of next year. The 85.95s already in the money by 60 cents. We're going to try to pick it up about $3.60 here. The midpoint's 361. I might have to change that a little bit later on in the day here if I don't get filled on the trade. We do think we can see a very quick double on this, because we're already in the money on this. If we can get oil to at least stop at the recent fall that it's been in, we could start seeing this definitely start to trade a little bit higher, at least on the ETF wise. So the trade that we're doing is the March 15, 2024, 85 by 95, $10 wide spread. We're going to try to pick it up at about $3.60. Obviously, I don't know people's risk tolerance and what their situation is, so past performance is, of course, not indicative of any kind of future returns here. But this is definitely a trade that we feel that we could see some profits in within the next month to 40 to 60 days, to 45 to 60 days out. We are still holding on to the Devon call position, and I'll give any updates once we have that. Happy trading, everybody.